taking a look at BlackBerry stock, we have this overall cycle right here. I'm going to explain what price points are going to cause the issues in terms of resistance levels to pass. I'm going to talk about support levels, what price points you could look at entering at. Hopefully it would bounce off those support levels. And I'm going to explain the overall movement as to why the run-up is just getting started right now. We're not even in the middle of the run-up yet. And what price point it could potentially get knocked down in terms of the max run-up levels. Just a quick overview. I'm going to release a more detailed video for that in the coming up days. So we had this overall cycle right here where we came down, bounced off December 2020, January 2021, went up to the upside, hit resistance, came back down, bounced off May of 2021 right here twice, went up to the upside, came back down, and then was anticipating to come down, bounce off support level, but did not, and reverse to the upside right now. Now, technically there might be, actually, so there's a downward trend resistance line right here. It only has 2 touch points. So it's not a guaranteed downward trend resistance line, but if you think it's going to act as resistance still, and if it were to spike up right now, you're looking at, when I measured it, around roughly about $14.35. But if it takes longer, just keep in mind the lower the high will be. So if it takes until September 16th, you're looking at $13.38, give or take around that range, plus or minus. So, but if it were to drop down like a rock right now, but there is resistance levels leading up to that price point, by the way, and I'm going to go over all that stuff. If it were to drop down like a rock right now, which I do not believe would happen because it would have to pass all these support levels, that I'm not going to mention all of them. I'm just going to mention the ones I think are potentially in play. But if it were to drop down, you're looking at the low $9 price point as support level. And I would say this is a great entry position. It's, in my opinion, going to bounce back up, almost guaranteed. But again, that's just my opinion, not advice. So quick disclaimer, like always, everything I do share with you is just my opinion. It is not advice. So please do your own due diligence and research before buying and selling. I'm not a professional, and I'm not a financial advisor. And if you do like the video, consider dropping a like. It does help with the channel, so thank you so much for that. Now, in terms of the upside or the down, I'm going to cover the downside first, and then I'm going to cover the upside and the potential run up in terms of max resistance levels where you could potentially exit out if you're a short-term investor. I'm a long-term investor myself, so I'm going to be playing it a little bit different anyway. So we have this upward trend support line right here that we formed back in August 26, 2021. And right now, it looks like it's still intact, but there's a chance that it could have a small pullback. And the reason why I state that is because if you look at the MACD line right here for the 3-month chart, this indicates if it's a bearish or bullish movement. Yes, it is in the positive right now still, so indicating a potential bullish movement still, and it could curve back up, and I think it might curve back up. But before that, I think it might cross over to negative just a little bit, potentially having a small pullback. Now we close at $11.68 as of September 1st, 2021, but the small pullback and the after hours is around $11.83. But the small pullback would be at the $11.50 range. I don't think it's going to get pulled back any lower than maybe even $11.57, to be honest, based off the horizontal support levels. So that would be in play. And the reason why, though, is I didn't specifically clarify, is because if you look at the 1-month chart right now, it is in the negative, it is in the bearish movement, so it is not optimistic, and this might cross over to the positive quick enough where the 3-month chart might just have a very small dip and then cross over to positive as well relatively soon. And especially for the fact that after hours is already in the positive a good amount. I think it was 1.3%. Now if you look at the 1-day chart, the 1-day chart is already in the bullish movement, but you could almost disregard that because it moves relatively too quick. But if you look at the 5-day chart, the 5-day chart MACD line has been kept under the whole entire day for the most part, besides the first initial run up. So because of that, it looks like to me the next trading day would be winding up for the upside, more fueling the other graphs. Now, if you think the pullback is going to be more than the $11.50, I will cover lower, so don't worry about that. So the next support level is at roughly about $11.33 to $11.35, give or take, around that price point range. Then the next support level, I would say, is probably bouncing off this moving average right here, which is not a guarantee to bounce off that moving average, but $11.24, $11.25. Then you have support level at the horizontal support level, where it's $11.16 to $11.18. Then the low $11 price point, so the clean $11 as well. And then you have that range again, where it's about $10.90, $10.80, $10.70. I do not think all these are going to be in play. I think most likely $11.50 is going to be the lowest, to be honest, in my opinion, for the time being. Obviously, I'm not talking about in the next 3 months, 6 months, a year, all that stuff. Those price points could always be visited again in the future. But I'm just saying for the time being, in terms of run up, what we were seeing, I don't think 1135 will be seen, but anything is possible. So keep that in mind. This is just all my opinion, not advice. But those are the price points. And the 1090, 1080, 1070 is more of it's going to bounce off the support level right here. So if it were to break down, bounce off the support level to go up the upside. So that's that. Now, if it were to go to the upside, like I stated, 1435 if it were to spike up right now. But before that, leading up to it, we've seen already 1180, 1190 resistance level around that price point is quite difficult to pass. Then we have the $12, obviously, with those clean numbers. Then you have the more specifically, so yeah, the low $12, but more specifically, you can see horizontally right here around $12.38, $12.36, $12.37. Horizontally right about here, 2 times went up, got knocked down, went up, got knocked down. And there's other times in the past history where it did the same thing around that same price point. So $12.38, ultimately getting to $12.40. You could have a false breakout where you hit probably $12.41 and come back down. But the thing is too, there's resistance at $12.50. So that is another issue too. But once that gets passed, you're looking at, yes, there's going to be resistance at $12.83 roughly, give or take. And then the $13 price point again, those clean numbers are always, they do cause issues. So you got to be careful about that. And what happens after that $13 price point, you're going to have resistance at roughly about $13.28, give or take, plus or minus a few cents. So $13.38, maybe $13.33. Once you pass that, yes, you'll have resistance at $13.50, but the one I'm most concerned about is $13.93, $13.94, ultimately around that $13.90 range. So it could be even $13.97, because getting to that clean $14 price point, specifically that $13.90 is extremely difficult to pass, what I've seen from the past. So unless volume picks up like crazy, again, everything gets played out based off volume. So if we see a spike up in volume in terms of purchases, all these resistance levels could be just cut through like butter. They might not even cause issues. But if you don't have volume, these are the price points that could cause issues. So again, breaking that $13.90 is going to be quite difficult. Then $14 price point. Then we saw $14.35, give or take. Once that passes, yes, you have resistance at $14.50, but the resistance level that's going to be quite difficult is that $15 price point. So once you break through those resistance levels that I mentioned, you'll be past this downward trend resistance line, right? More specifically, you want to pass $14.50 because you want to account for false breakouts too. But now, in terms of not guaranteed, but knowing the run up. So this is the important part. If you pass $15 price point, you know that you're a little bit underway for the run up potentially in terms of being in the midst of the run up. But the coast is not clear yet. You still need to pass $16 price point in terms of resistance and $16.50. Once those are passed, yes, there'll be resistance at $17 and $17.30 as well, and then $17.58 too, and then $18 and $18.50. But I believe, in my opinion, if a $16.50 gets passed relatively easy somewhat, then those would be passed easily, but then you would get stuck again between that $20 price point, $21 price point, potentially. Now, there is additional run-ups to the upside as well, but actually, I'll elaborate more, but I'll explain why potentially the run-up could be happening and why it's underway still. For the most part. So if you look at the 1-year chart, this is again indicating if it's a bearish or bullish movement. Right now, it is still in the bullish movement, indicating more run up to still come. And then the one I have the most conviction on is the 5-year chart. This 5-year chart with the MAC line in terms of 5-year movement. Right now, yes, it is in the negative. It is in the bearish movement, but these bars have become a lighter shade of red. They become smaller. Like I've mentioned in the past, right about here, entering here back in May of 2021. You would have entered at the lowest price point before the run-up, and that was still when this bar or this MAC line was in the negative. These bars were a light shade red and got smaller, but still did not cross over to the positive yet, and you would have entered at the lowest price point. So yes, it is risky, so keep that in mind. This bases off your risk tolerance, your financial, the way you move your financials overall. So if you want to enter at the best price point, but it involves risk, then hypothetically entering at these price points would be, in a way, ideal. Now, another way you could look at it too, this is for the 3-month chart, but if you could visually see it for the 5-year chart, I know it's not clean, but you could have an upward trend support line right here where it came down, bounced off support, went up to the upside, came down, bounced off support almost, went up to the upside, came back down, and we see a bounce right here. So if you think this bounce is legitimate, then combined with this MAC line, then we're good. And then also, if you look at the RSI chart right here, this indicates if it's overbought or oversold. So if it's on the top side, it's in overbought territory. If it's on the low side, it's in the oversold territory. Right now, we're somewhat in the middle, and we saw it like past run up. So when you see at the peak of the run up right here, it's passed like over the chart again right here, like hopefully you can see it, but past the chart again, and you had that massive run up. And then right here, did not pass the chart, but at least hit the peak, and you had that run up right there. So right now we're not even at the peak, we're in the middle range, and we, in my opinion, we have way more room to grow, especially combined with these two points that I mentioned. So this upward trend support level, this MAC line, all that stuff. Now, in terms of the price points past the $20 price point, should you sell this time around for $28, $29? I'm going to elaborate more specifically in the next video, or like the next couple days video, but just in general sense, once you pass $21 price point, you're going to have resistance at the $23 price point as well, then $25 price point, then the $28, $29 price point, where again, it's an extremely strong resistance level, $28, $29 price point, but if there's enough volume, it could break through it, and hypothetically, it would be worth your while to wait for that to be broken through for, in my opinion, a massive run up. The only thing is though, it will take a lot to break through $28, $29 price point. $28, $29 is not easy to break. The way it would be broken though is because the patent sale is coming out hypothetically relatively soon. It's unknown, guaranteed. It's not guaranteed, and it's unknown that it'll be coming out in September. But there is a good chance. And when it comes out with earnings, if earnings is if earnings is really good by itself, then that, I don't think that would warrant a run up past $20, $29. So disregard what I was about to say for that. But if it's good, then we'd have a decent run up, I would say, for the really good patent earnings. But I'm not anticipating a really good earnings based off what John Chen stated 2 quarters ago for this quarter in terms of the forecast. The only way to pass $28, $29, if the run up leading to the patent release date at the end of September for earnings is decent, and also if the patent sale does come through. So if the patent sale comes through and we're like in the $20, $21 price point, I'd say, then patent sale comes out and the run up, in my opinion, would break through $28, $29 price point, and then go for a more massive run up. And I guess it depends on how big the patent sale is, because if the patent sale is a joke and it's only like 200 million, which I'm anticipating, to be honest, in the billions. That's what I'm anticipating. But if somehow it's a joke, then yeah, it won't pass $28, $29. But I don't think that's a concern, so you don't have to worry about that. And one more thing for the RSI charts, by the way, right now, again, like I stated, it is in the heavily overbought territory hypothetically, but it did dip down back right here. Hopefully you could see dip down a little bit. But I would not say it's much concern in terms of 3-month chart, because you could see right here where the January spike up, it was pretty much hanging out in the heavily bought and extremely bought territory the whole entire time, and yet it was still making massive highs the whole entire time. So you can see the first spike up, it went up, got pulled back just a little bit. Compared to the run up, it's pretty much a joke in terms of how much it got pulled back. And then the second spike up, so it would go up to heavily bought, overbought territory, then come back to the mid-range, and then go up to heavily bought, overbought territory again, have that spike up, get a small pullback when it goes to the mid-range again, and again, that small pullback is nothing compared to that run up the whole entire time, and the cycle just repeats throughout the whole entire time for the January run up. So I think we might be in that same cycle again. I'm just a little bit concerned about this downward trend resistance line, but again, keep in mind it only has 2 touch points, so it does not need to act as resistance guaranteed. So hopefully you've enjoyed this video. Hopefully you found it helpful. If you did, consider dropping a like. It does help the channel, so thank you so much for that. I feel like I'm missing something, but if you have any questions, do not hesitate to ask. I'll try to answer them as soon as possible. I apologize for the delay. I'm constantly busy with work and some stuff on the side, but I will get to them as soon as possible. And if you like videos like this or other financial videos, consider subscribing so you'll be notified when I do upload those videos. Thanks again for watching. Appreciate it, and I'll see you in the next video. Peace.